today is GM, 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 GM. So today is Wednesday, 17th of April. Bitcoin's at a key level here. So yesterday we pushed down into the lows, unable to break any lower, down into attempting to fill the wick from the Saturday nuke. So we had our Saturday nuke, we had our automatic reaction bounce, and now we're coming back down to try and potentially form a range or see continuation. Because when you go to the 4 hour chart, as I talked about in daily levels, this is still in a downtrend and rejecting off the bands, and the bands are not compressing. Excuse me, the bands are not compressing. They're not moving closer. So you expect those bands to fail and push lower. We've pushed into it this morning. It's rejected off it. It set a consolidation at the highs. It swept out those highs. Strong sell off from that. So this is a phase and a period where Bitcoin can very easily run to new lows, which would be below yesterday's low, and take out that liquidity at the bottom. So this is where people who are trying to catch the bottom again and again and again and again, that's where their stops will be resting. As we saw yesterday, when we pushed down and people were shorting into the lows and shorting into the lows and shorting into the lows, it got absorbed. We rallied up, took out the highs. So any of the stops that were resting here, from people who've been shorting into Monday's lows, got stopped out. Since we flipped back across there, you can see a support level that formed, and then resistance. It flipped back into support briefly, and now it's into resistance again. So that's why I'm marking this level from a low time frame perspective. I think 63.6, 63.7, which is around the daily open. As you can see, it's faint on the screen, but the dotted grey line is the daily open, which you can set, by the way, with lines. Previous day close price line, turn that on. That shows you where the daily open was, right? So obviously an important level, because that's what separates a green day from a red day. And Bitcoin opened up this morning up at this level, tried to go green, pushing above. It's back below. We're now having a red day. Red day is in a downtrend, signal continuation unless something can happen. But for bulls to win this battle, they're fighting the trend. The trend is currently down and sideways. And so I'm looking at that level as being very important. If we get a rally up here, which we very well could, we're having multiple pushes lower. There hasn't been a bounce now for a few hours, since 6 a.m. when we had that initial breakdown. If it rallies up into the highs here, you want to look at this level. If it just touches off that daily open and rejects, then you're looking at a move all the way down to the lows. Obviously, that's if it doesn't move straight down from here. Otherwise, if it starts to show strength at that level, pushes above, tries to go back below, holds, and starts to consolidate and grind higher towards 64, I think that's where BTC can then be forming what is a temporary bottom. And if that happens, then you're looking at areas up here, right, where we broke down from. The strongest resistance, I would say, is this rough zone here, which the automatic reaction bounce is always an important level, right? Because everything that happens in here is just a gap on the chart. You have strong sell-off on Saturday driven by war fears. You have an automatic reaction bounce as people get stopped out and liquidated, so it can't go lower anymore. There's not enough sellers. And then people short into it and they get squeezed up. And this reaction, wherever that stops, is a very good place on the chart to keep a target on, because that initial reaction sets a true SR level on low time frames. We have that level now. We came back up to it on Monday, initially rejected it, popped above it, dropped back below it. So clearly that's another level that needs to flip on the higher time frames for Bitcoin to have any chance of pushing towards, the 70k area. And I think that in this little phase we're in now, we've got quite a nice setup where if it goes back to 63.7, rejects, and that's assuming we don't go down first, right? If we go down here first, then whatever happens depends on price action at the lows. If it comes down to the lows and then starts to move up here, I'd expect an initial reaction there, but probably then pushing up higher, right? So that's one of the paths. I don't think we're just going to collapse all the way to the lows, but maybe we will, because shorts piled in at the lows. They got squeezed up into the highs. And if the that liquidity has been taken, right? So the stops have been taken on the anyone getting stopped out on shorts. Maybe it's going to go and attack people who tried to catch the bottom again. Like I said in daily levels, chop is, in a very simple sense, these choppy, ranging, consolidating phases are, especially in a bull, when everyone is hoping Bitcoin goes up again. It's people trying to catch the bottom over and over and over again, combined with people flipping bearish at the lows. So you're looking at your support, you're looking at your resistance, and you're playing both sides. So we've taken out all that liquidity. We took out those stops and it consolidated and then pushed above, swept those and grabbed that liquidity, and a strong reaction to sell off. So to me, the upside move is done and we can see some downside. Again, I don't think it will go straight down. It's probably going to get choppy in here. Really, you don't want to trade. This is like for trade of the day, right? You don't want to take low time frame trades in this area. I don't think trading at all between 63 and 62 is a good idea, right? Because nothing that happens in here is going to have much of a directional, any edge in it. You've got your support below, you've got your resistance above. You need to wait now and be patient. If you're not already in a position, you need to be patient for it. My bias is towards downside, right? I would say most likely, I think we can go and attack these lows. Is that going to happen today though? Not necessarily. There still needs to be a catalyst. So a lot of this is going to be driven by good headlines for when we pump, bad headlines for when we don't, right? Maybe something happens with the war, good or bad, that causes the market to react. Don't forget there's Bitcoin buyers, the 13B forms for people who are buying the ETFs. So you could at any day we can have announcements of some big new buyer of BTC. That'll obviously cause a pump. When that comes during a phase of reaccumulation or consolidation, you want to fade those pumps initially. I'll take you back to Grayscale winning. This is something really important to remember. Good news can be good news, but not right away. Right? A lot of times people think, Grayscale won the case against the SEC. That was absolutely huge. That literally, and Gensler himself said this was when Grayscale beat the SEC. That was literally the reason why Bitcoin ETFs got approved. Gensler said after that, because the court mandated me to, I really couldn't reject the ETF. So that was like the biggest thing that's happened in the past year for Bitcoin. Yet, the pump retraced entirely and went lower initially, right? Because why? Because we were only just starting the consolidation phase. We had a strong sell-off, consolidate, move up. It just wasn't time. So I had to go back, more consolidation, build a base, and then we had a massive move after. I want you to keep that in mind. Definitely keep that in mind, because there's going to be good news. There's absolutely going to be good news for Bitcoin. There's also going to be bad news. Bitcoin is super relevant at the moment. It's never been more relevant as a macro asset, with ETFs and with Larry Fink shilling it and all that kind of stuff. So good news could be what takes us up towards the highs. Bad news can take us down towards the lows. But if you're looking at it and trading it, stay focused on what's in front of you, which to me is no trading between kind of 62 and 63. If it rejects off 63, the daily open basically, 63.7, 63.8, and falls back inside, you could see a move down to the lows. And if it flips that, which means it would initially reject, but then it will get back and it starts to climb up and it starts to really hold that daily level, daily open, you could be looking at a move up to the resistance above, which would be this breakdown level from Monday. And from there, who knows? But that's probably enough for low time frame daily levels. As for the data, I'm going to do a breakdown on that later about shorts and longs. A lot of people are saying, everyone's short, funding's negative, spot premium is gone. Understand that this takes time to build up, right? So I won't do a deep dive on it right here, but I'll show you on a 4-hour chart. We'll zoom out. So obviously open interest is on the top, funding rate is in the middle, and the premium is at the bottom. So we have a spot premium. If it's grey, it's a spot premium. That means spot is trading higher than perps, which in general, in a bull market, is really good because, as you can see, in bull markets, typically perps are leading as there's more speculation, there's more leverage. But when it flips, like it did over here, into a discount or into a premium, let me go actually further out, go to a daily. When it flips into a spot premium, a perp discount, spot premium, it doesn't mean right away that we move. We had low funding, so we moved up to 31k in April, and 6 months later, we still had the same spot premium, we still had the same low funding, right? And then eventually it moved. So clearly, premium and funding does not give you an entry signal, because a lot of people are saying it right now. Look, now we have the spot premium is back. That's good in one sense, but it doesn't mean get long. It only means get long when price agrees. If you look over here from the ETFs, we actually had the decline happen first, right? There was a small spot premium appeared here. A lot of people would have long because of that. What happened? It went lower and then lower again. And then it started to climb up with a spot premium. That is your absolutely most bullish sign. Again, context matters. You have to apply the context of the market itself. What does it mean when there is a spot premium and price is going up? That means price, the thing that's most important, is telling you I am going higher, and the spot market is driving this. That's a textbook spot-led rally. You can see what it led to. Here is not the same. Price is going down and we have a spot premium. That's okay. It's better than having a perp premium, because if we had a perp premium still here, it would mean people are still trying to long the dip and long the dip and long the dip. That's not good. But when you start to see price moving up, that's when it matters. Because right now, guess what? This can go like that, it can go like that, it can consolidate, right? And we can have a spot premium all the way here, and it can still go down. But if you then start to see it make some higher highs and higher lows, and we're still seeing this spot premium, that's the point at which it looks really good for a spot-led rally, especially if we keep rising. Because what happens then if we start rising and the spot premium disappears again? It's telling you that people are still trying to get long. They're still trying to, excuse me, they're still trying to chase this bull market move, and we might have to go again for more accumulation. So remember, premium, discount, funding rates, all of that, it's all context dependent. Negative funding, negative funding, negative funding. People talk about negative funding. Oh, it means shorts, it means shorts. It doesn't mean shorts. It just means there's a differential between spot and futures. It doesn't tell you if it's heavy shorting or if it's just a lot of people getting stopped out. Like that's what happened over here. Why do you think we have a spot premium right now? The reason we have a spot premium now is because the futures price got nuked by leverage. Right? We had a shakeout. We had a leverage liquidation, and I'll show you this on the chart. Let's go to the after the nuke from the other day, right? The futures price went so much lower because people are getting stopped out, they're getting liquidated, and that forces the price down. That doesn't happen on spot. There's no liquidations on spot. Spot can only go down if people actually click the sell button or they have a stop loss, right? On futures, on perpetual futures, you can get forcibly liquidated by the exchange. If you use leverage and you don't use a stop, you're going to get forcibly liquidated. So the price went all the way down on Bybit as low as 59,776. Go to Coinbase, which obviously doesn't have any leverage. Where did price go to? It didn't even go below 60. It went down as low as 60.8. So there was $1,000 differential in that wick. It just shows you how much destruction there was on perps versus spot, which again is a good sign long term. That's usually a good sign of a higher time frame bottom forming, but it doesn't mean in the low time frame, it doesn't mean in the immediate term that the spot premium that's here is a sign of really strong spot demand. Again, I take you back to post ETF. The reason there was such strong signal of this, and it was one of the reasons why I was getting long in there, if you remember, is because price is rising with a spot premium. That means the upwards move has been driven by spot. Right now, we have a spot premium after price is nuked. Not necessarily because there's loads of aggressive spot buying. It's because there was such aggressive perp selling that it dislocated the price. Understand? And there are people shorting, yes. But you're a fool to think that a Bitcoin at 63k, not having broken any key levels, right? It wicked below 60 on perps, but Bitcoin structure is broadly staying well. You're naive if you think that that everyone's just shorting this and nobody's long. That's just not true. It's a bull market. You can guarantee people are trying to revenge trade, right? They get stopped out or liquidated on their longs. and they're trying to catch the bottom again on desperation. I have to catch the bottom. I have to catch the bottom because I have to make it all back from what they got wrecked on. So they're going to keep longing the bottom, what they think is the bottom. They're going to keep longing. And it's only usually once you've had several false, failed rallies, false breakouts, attempts to go higher that fail, we push down, we sweep them out, we push down, we sweep them out, then you start to see people truly give up. So let's say we did get something like this, you push lower, failed bounce, you push lower, and then it bounces up, and you still see a spot premium, and then you see price rising, spot premium stays, that tells you that the perps have fully given up, spot are actually pushing the market up. Right, they're not pushing the market up right now. The market's just sideways down, and that's the sign then that we're actually shifting from a higher time frame perspective back into more bullish conditions. So, GM.